Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking this evening. A late rebound helps Indian equities end in the green after a highly volatile session. The Sensex and the Nifty close 0.5% higher. The rupee ends flat after being stuck in a tight range as dollar selling by exporters, and probable RBI intervention offsets a global dollar rally. Global crude oil prices inch higher. Supply concerns resurface to overshadow demand worry. Saudi Arabia floats the idea of output cuts by OPEC Plus to support prices. Traders fear a drop in US crude inventories. Cipla bets big on its wellness business to drive the next wave of growth. MD and Global CEO Umang Vohra tells CNBC-TV18 he's banking on both acquisitions and new product launches to grow this into a 3,000 crore rupee business over the next 5 years. Adds the overall focus is on deepening the Indian and US markets through innovation and entering new areas. Nestle India's chairman Suresh Narayanan is hopeful of double-digit growth due to strong urban consumption and demand for premium products. Adds the commodity inflation is still a concern, even as he sees some encouraging signs in rural India. The Supreme Court observes that the issue of so-called freebies must be debated, and no one can deny this. Chief Justice of India takes exception to comments made by Tamil Nadu's finance minister questioning the court's jurisdiction. The apex court will hear the case again tomorrow. The Supreme Court also issues a notice to Baba Ramdev, and the union government agrees to hear a plea filed by the Indian Medical Association over Ramdev's comments criticizing allopathic medicines. The court asks Ramdev what is the guarantee that Ayurvedic medicines perform better than allopathic medicines. 22 entities, including Indian hotels, Hilton and DLF, expressed their interest in Hotel Ashok's monetization drive. Sources say the tourism ministry will now seek approvals on various inputs received from potential bidders. Add that bidders may be allowed to construct service apartments and convention centers on the property. The government asked electric vehicle companies availing incentives to share data on domestic value addition. Sources say an auditor must certify the data and self-certified by the manufacturer. After filing papers to launch an IPO, the founder of Sula Vineyards, Rajiv Samant, says the company can grow at 20% annually. Also adds that a free trade agreement between India and Australia will lead to a significant cut in import tariff but will not impact Sula's business. Former U.S. President Donald Trump sues the U.S. government over the FBI raiding his Florida residence, seeks the appointment of a special watchdog to review the documents seized during the raids. Well, let's start with the market action, where the bulls clawed back in trade today as stocks made a dramatic recovery on Dalal Street after an early fall. So the Sensex gained over 300 points, going back above the 59,000 mark. The Nifty gained nearly 100 points, with mid-caps and bank stocks leading the rally. Anuj is here to wrap up the market action. Very volatile, but finally closing in the green, Anuj.
Well, the market had a very strong bounce after the morning session, or rather the first hour, which looked extremely weak because of the global cues. But both the Nifty and the Bank Nifty bounced right from the 20-day moving average. And auto stocks, as has been the case, led the sort of rally once again. In fact, in terms of the auto names, you had Eicher Motors, which made a fresh 52-week high. Mahindra and Mahindra is nearly there, and Tata Motors was also quite strong. Some other heavyweights which sort of participated in the move, led the market move from the lows, Reliance, ICICI Bank and State Bank of India. The commodity stocks also did well today, so names like Tata Steel, Hindalco and Coal India were all higher. The only sort of weak point in the market today was IT, large cap IT in particular. Names like TCS, Infosys and HCL Tech, though off the lows, but still a bit of a weakness for IT names. And in the F&O space, we had some big gainers like RBL Bank, IDFC First Bank and NMDC. All in all, the market's been making these kind of large moves in both directions. But what today has done is it's given us a bit of a line in sand around the 20-day moving average.
All right, Anuj, many thanks. But in the currency market, the rupee stuck in a tight range through the day as opposing forces caused some volatility. A global dollar rally locked horns with dollar selling by exporters and what traders believe to be RBI intervention. The domestic currency finally closing flat. In the bond market, bond prices climbed off early lows following comments from the RBI governor that the central bank's recent rate hikes were having an impact on reining in inflation. However, yields remained elevated as traders tracked the rise in crude prices and watched for further cues from the U.S. Federal Reserve's Jackson Hole summit that starts on Friday. Speaking of crude oil prices, the firming up seen in prices overnight continues. Despite choppiness, crude oil prices trading over 1% higher as the focus is now shifted to supply-side factors. This comes after Saudi Energy said OPEC Plus may consider a cut in oil production to stabilize a volatile market and prop up prices. This has overshadowed concerns that global demand may slip on the back of a recession in many major economies. Well, here's a CNBC-TV18 exclusive. Drug maker Cipla has big plans for its wellness business, which includes doubling its revenues from India as well as the US markets over the next 5 years. A large portion of the expansion will come from the wellness business, which has seen some good traction across customer categories. MD and Global CEO Mahindra says the plan is to use both acquisitions and new product launches to grow the business fivefold into a 3,000 crore rupee business over the next 5 years. He also told me that the company will work on deepening the Indian and US markets through innovation and entering new areas. Take a look.
What we're seeing in India is incredible amounts of deepening of the healthcare market into tier 2 and 6 towns. We are seeing a wave towards wellness. And both of these are opportunities that we want to capitalize, not just for India, but also for the rest of the markets across the world. So that will be growth driver number 1 for us, which is just the deepening of the presence of healthcare in India. And the evolving consumer healthcare space.
Let me start by addressing the wellness segment that you spoke of. And as you pointed out, you have aspirations of building that out even further. How much of that is going to be driven inorganically? Is that an active discussion that you're having with potential players at this point in time? And what would the size be of that business, and what kind of investments do you hope to make within that space?
So we have very large organic brands in the wellness space, and our objective would be to grow and deepen these organically first. Of course, inorganic is a part of the strategy. But I think if you look at just the depth of our organic brands, we have several brands which are 200 odd crores big. The total business right now is about 600 crores. We can see this business growing on the health side itself to close to about 2,500-3,000 crores over the next 5 years. So we are very bullish about consumer wellness. I think this is a business that will require us to be a lot more D2C oriented as well, in addition to creating equity for these brands with doctors and with patients. So we have large number of brands in the pain space. We have a large franchise in the vitamin space. We are the leaders in the nicotine replacement therapy. And over a period of time, we will create more brands in the cough segment. We will create more brands in the mom and children segment. And I think we feel very bullish about this category in India.
What is the current spend, and what do you anticipate the spend to be over the next few years as you enhance your focus on innovation?
We're currently about 6%. And I think that going forward, two things would happen. We'd obviously continue to be 6% of a certain base that hopefully would grow on the top line. But we are also thinking of increasing our innovation spends to close to 7 to 8%. And I don't think in the way we look at our business model today that we can ever be higher than 8%, considering the needs of our stakeholders and what we think we can productively spend on. So I do think innovation spends in the company will increase on the R&D side from 6% to closer to between 7 and 8. But we're also innovating on our business model. The whole digital wave is effectively trying to allow us to mitigate the increase of inflation in the economy. So digital is wonderful because on the business model side, it allows you to get into lots of adjacencies at much cheaper cost. So the cost of acquiring a customer or the cost of detailing to a doctor on a digital platform is almost 1/3 or 1/4 the cost that it would take for a usual platform.
And you can catch the entire conversation with Cipla's head Umang Vohra all day today on CNBC TV18 on our show On the Record. FMCG player Nestle India says it's seeing strong consumption in urban markets while rural demand grows at a lower base. The company's chairman and managing director Suresh Narayanan told CNBC TV18 there is still an underlying pressure of commodity inflation, and the company is closely watching food inflation, which continues to be elevated.
We've had growth across small towns. We've had growth across semi-urban areas. And in fact, for quite a few quarters in a row now, we have been having growth in rural markets as well. Unlike some of my peer companies which have got a higher play in rural markets, I have a relatively lower play. I still am a little bit worried about the underlying commodity inflation that is coming through. Now one hopes that with a good monsoon, hopefully some of the locally sourced crops that we have, in fact all of our crops are locally sourced, but nevertheless they are influenced by international prices, that there is some reformation as far as the international prices itself is concerned, which might help us. But food inflation is a matter of concern, and we should be watching out for it.
Not just Nestle, other retail players are also upbeat about demand growth. Metro brand says inflation hasn't affected demand as much as was expected, while Shoppers Stop expects strong double-digit growth over pre-COVID levels. Take a look.
All of our concepts of Metro, Mochi, Walkway, and Crocs had some very nice gains in all the markets that they operate in all the different categories that we sell in. As we look to the following quarter, the RAI reported strong numbers for July, and Metro is definitely part of that momentum that seems to be happening in India all over. Inflation doesn't seem to have affected the demand as much as one would have thought it might have.
We have a very, very strong plan for the full year number, and we would be looking at a significant growth. While I wouldn't want to get into specific numbers, what I would say is that we would be again looking at strong double-digit growth over the pre-COVID numbers. And that obviously is fueled by two factors. One is the growth engine which we have from our like-for-like stores, but apart from that, also an expansion.
Well, a busy day in Supreme Court today. Let's start with the case concerning so-called freebies. The Supreme Court has observed that nobody can deny this is an issue and has called for a debate. The court has also taken exception to comments made by Tamil Nadu's finance minister, questioning the court's jurisdiction in the matter. Ashmit joins us now with more on what transpired in court and what next now. Ashmit.
Well, the Supreme Court, in fact, deliberated at length on the issue of what freebies are and how to proceed with that. To begin with, the Supreme Court noted that it's difficult to come up with a watertight definition of freebies, citing the example in Bihar where cycles were given to females and that led to upliftment. But nonetheless, the Supreme Court did observe that this is a serious issue, definitely merits debate, and towards that end, the Supreme Court appears to be leaning in favor of constituting some form of committee that will comprise of various experts that will, in fact, deliberate on the issue. In fact, the Supreme Court even asked the question as to who would be a fit candidate to lead such a commission. The Supreme Court observed that ideally it would have wanted for this debate to take place in Parliament, but that now that it has been seized of the question, it wouldn't mind delving into the subject. In fact, the Supreme Court even made observations with respect to certain responses coming from certain quarters that have in fact raised questions regarding the Supreme Court's jurisdiction. Nonetheless, in response to some of these questions, some interesting answers emerged. Kapil Sibal, who has been requested or invited by the Supreme Court as an amicus in this matter, suggested that under the FRBM Act, there is already fiscal discipline rules in place. 3% cap is placed already on states, and that can be a mechanism used to check for fiscal indiscipline by ensuring that there are lower grants issued to states that have breached those limits. That was a suggestion which in fact was echoed by the Aam Aadmi Party as well. The Aam Aadmi Party, represented by Abhishek Manu Singhvi, argued that to monitor or to regulate promises or election speeches would be tantamount to issuing a gag scheme that would be violative of free speech laws, and that the only feasible way to go around it would be in fact to rely on the FRBM targets. The centre, however, had a very different take on all of this. The centre said that, look, this is something that desperately needs the attention of the court, needs some form of regulation, citing issues in the power sector, saying that freebies issued by various governments are bordering fiscal indiscipline, and that the political parties cannot endanger the economic health of the country for seeking the top seat, the top position. The Supreme Court for now has stopped shy, has paused before making any orders. The hearing, we understand, will continue tomorrow, and that's perhaps when we can expect more clarity.
Ashmit, many thanks for joining us on that issue, but don't go anywhere because we're back with you on another case that you've been tracking. The Supreme Court has also agreed to hear a plea filed by the Indian Medical Association against yoga guru Baba Ramdev. Ashmit, take us through what that's about.
Well, this is not a new issue. In fact, it was raised first before the Delhi High Court. Now it finds itself before the Apex Court. And this is pertaining to various advertisements for Patanjali products that had been, in fact, issued in various national publications. The IMA, or the Indian Medical Association, has called it a smear campaign, saying that frivolous pieces of information and claims have been put out in various national dailies. Allopathic medicine has been in fact questioned. In fact, certain advertisements even claimed that doctors themselves have suffered fatalities despite being doctors themselves and being in charge of allopathic medicine. And such claims, in fact, was something that the Apex Court took objection to. The matter was placed before a bench headed by the CJI. The CJI questioned Baba Ramdev's counsels that while he may be an authority on issues such as yoga and Ayurvedic medicine, it does not endow with him any right to in fact hit out at allopathic medicine, that is an alternate medicine that he is propagating, that's Ayurveda. But there is no one can stake a claim to Ayurveda being the answer to all forms of illnesses, and that this is something that even the centre will have to consider. The IMA essentially is seeking action by the centre to be initiated against Baba Ramdev, and on that count, the Supreme Court has issued a notice in this IMA application to both Baba Ramdev as well as to the centre, and has sought a reply from both the parties on the concerns that have been raised by the IMA and the call for action against Baba Ramdev. Centre will have to reply on that.
Ashwat, many thanks for joining us, and we're not done with news from court. The Supreme Court has formed a 5-judge constitution bench to look into both Uddhav Thackeray and Eknath Shinde's camp's plea, claiming that they are now the official Shiv Sena. The Apex Court had scheduled a hearing on the 25th of this month and had directed the Election Commission not to take any action till the next hearing. The Supreme Court has also agreed to hear a petition challenging the remission granted to the convicts in the 2002 Bilkis Banu case. The plea has sought setting aside of the order granting remission to the convicts and their immediate release. Bilkis Banu, who was a 19-year-old, was 5 months pregnant when she was gang raped during the post-Godhra riots. 14 members of the family, including her 3-year-old daughter, were killed by a mob. All 11 convicts sentenced to life imprisonment were freed after the Gujarat government approved their remission. The Apex Court has declared Section 3, Subsection 2 of the Benami Transaction Prohibition Act as unconstitutional. The clause prescribes that whoever enters into any Benami transaction shall be punishable with imprisonment for a term which may be extended to 3 years, or with fine, or with both. The court said the clause was manifestly arbitrary. The government has asked electric vehicle companies who are availing of incentives to share data on the domestic value addition. Sources say the Heavy Industries Ministry has told manufacturers that they need to get an auditor to certify the data. The move is aimed at ensuring transparency. Parikshit joins us now with more. Parikshit, clearly the government trying to plug the gaps and the loopholes and tighten the process by which incentives can be availed of.
There have been a lot of complaints about certain EV companies, about their local value addition, about their supply chains, about how much they are actually localizing in India. And therefore, in order to ensure greater transparency, there has been a circular which has been sent by the Ministry of Heavy Industries to all auto companies to comply with if they want these FAME incentives. Earlier, if you wanted a FAME incentive, you would submit ARAI certification on your domestic value addition in your electric vehicle once. But now what will happen from the 1st of September tentatively is that every EV company will have to comply with a certain domestic value addition formula, and they will have to give domestic value addition compliance for each batch of vehicles they are seeking reimbursements for, subsidies for, from the Ministry of Heavy Industries when it comes to FAME. So you will have to submit data chassis-wise, batch-wise. There will be a formula that will have to be complied with. This will have to be certified by a chartered accountant, self-certification by the companies as well. All of this will have to be uploaded on the FAME portal, on the Ministry of Heavy Industries FAME portal on a regular basis. So this has been put into place for greater checks and balances for companies who are applying for FAME incentives.
All right. Thanks very much, Parikshit, for joining us. We will head into a break, but up next, 22 entities, including Indian Hotels, Hilton and DLF, expressed their interest in Hotel Ashok's monetization drive. That and more when we return.